Grains back lower on Tuesday. Ted Seifried with Zaner Ag Hedge is back with us. And Ted, grains, did we just see some profit taking there? No, corn and soybeans had kind of moved up into some resistance areas on the charts, didn't they?
Well, turn around Tuesday, Michelle, and we did do that. Bear market bounces will get to that first or second resistance level. And in this case, the first resistance was the 10-day moving average, but the major resistance for corn and soybeans is that 20-day moving average, which also reflects the top end of the downward trending channel that we've been in since basically November, and have accelerated actually since the first of the calendar year. So we went right to resistance, and then we failed. And you saw, I guess some profit taking on the small bounce that we've had. But I think more than that, we probably saw some producer selling come in because there's still a lot of unsold corn and beans from old crop that is remaining to be sold out there. So, either way, that selling pressure did come back in on a turnaround Tuesday. And it really makes you wonder now what happens going into Wednesday, Thursday, Friday, sitting right back on top of that 10-day moving average, which is support. But, we really didn't close much above it. And then, the expectations for the report that we have on Friday aren't tremendously bullish, it doesn't seem. So how does that work out? Or what's the positioning going to be like before the report?
Yeah, so when you talk about the report, we're not going to get a lot on the domestic balance sheet necessarily, but we've been disappointed with the South American numbers USDA has gave us. So is that the fear here again?
Yeah, maybe. USDA has been very reluctant to lower that Brazilian soybean production, even though we know they've had their weather issues in some of the major producing areas. It really kind of makes you wonder why. And I've got a theory about that, Michelle. The USDA has had to raise the Brazilian crop after the fact, and even well after the fact, the last 4 years or so. And I think they're catching on to that, and they're not wanting to have to do that again this year. So I think they're thinking that their original number might have been too low, which is maybe why they're not lowering it as much as what all of us think they should, because we're using their original number as a baseline, where their baseline may have actually gone higher. So, I don't exactly know, but let's say they do lower the Brazilian soybean crop down to a 152, right about. The average trade guess is just above a 152 million metric ton bean crop. But let's say they do that. Okay. But then what? What do they do with that? Because generally speaking, when you lower production in Brazil, that means that you're going to have to lower their exports. It also means that the exports are going to have to come from somewhere else. It's called demand displacement. However, they might not have to do that because we're not seeing the export sales to really justify a higher export number domestically, not a higher U.S. export number, at least not in my opinion. So if they have to lower Brazilian soybean production, does that mean that they have to go in and lower Chinese demand and pretty much keep the global balance sheet unchanged around a 115 to a 116 million metric ton global carryover? If that's the case, I think that would be really rather bearish for the soybean market because the hope has been throughout the entire Brazilian first season, growing season, that a smaller bean crop there would mean more exports for us. But to this point, we have not seen it, and we continue to miss out on the export sales that we've been hoping we would see.
Absolutely. We're also missing out on other exports, including corn. And while there's talk that there's been sales out of the PNW, there's talk that China is going to be stockpiling for their reserves. They're buying a lot of Ukraine corn right now, aren't they?
Yeah. Ukraine's been their preferred corn partner for quite some time, and they've now opened the door to Brazil. They bought a lot of Brazilian corn. I think last I checked, it was over 22 million metric tons from Brazil, which compared to our little over 8 million metric tons sold to China this year, that's not great, especially since 2 years ago we had sold China, I think, 23 million metric tons. So Brazil's really stepped in and kind of taken our place, while the Ukraine has continued to send China corn just like nothing's really ever happened. It's kind of wild. And it really begs the question as to why is China importing all this corn? Now, as you just said, they could be stockpiling corn because they feel like these are good prices to do that at. Or I do also think that they're trying to change their feed rations from a less soybean meal intensive feed ration to a more corn or a higher corn percentage in the mixture to in order to, one, lower the cost of the feed that they're feeding their hogs, but then also too maybe decrease their dependence on the U.S. and Brazil for that matter, but so they don't have to import 100 million metric tons of soybeans every year. And if that's the case, that could really be a significant thing, not just for the rest of this year, but for years to come.
Absolutely. You and I have talked about that before, so certainly something to watch. The wheat market, more new contract lows in Chicago wheat. And of course, that market is not doing any favors for corn or
No.
soybeans, in fact. But is the pressure all coming from the fact that European Paris milling wheat futures just kind of continue to go down into contract lows there as well?
Yeah, Michelle, there's a lot of wheat in the world, and we don't have this hot and heavy inflation. Worried about having enough to feed everyone and everything. The whole narratives that we had 2 years ago, right? Those have all gone to the wayside. Now we're more worried about deflation, even though inflation's showing up. It doesn't seem like the Fed's lowering interest rates anytime soon, and they're going to continue to fight inflation. And you've got your funds, commodity funds, but really, I mean, your overall money managers that trade inflation, they're still positioned in a deflationary mode, and so that's bad for wheat. Domestically, globally, trade has really slowed down. We don't have any expectations for a big bullish surprise on this report on Friday. Our expectations, or at least the market or the trade expectations, are for pretty much an unchanged report for both our domestic and the global carryovers for wheat. So there's just really no spark. There's nothing to get the funds, your managed money out of short positions, and we're just in this sort of default continue to go lower mode. And until that changes, like you said, that's a real uphill battle for the row crops too.
Yeah, absolutely. Cattle market had a little recovery here today, which was kind of impressive considering what the stock market was doing, but we couldn't take out yesterday's high. So are we just going to be kind of range bound for a little while, you think?
Yeah, cattle have been pretty much straight higher since we put our lows in December 6th. And while I think we got way too low back in early December, and these are more, I'd say, value prices, you have this sort of volatility that's been happening the last few trade sessions. Go back to Friday where we were sharply higher, then sharply lower Monday, then back higher again. And so when you're getting these bigger moves, bigger intraday moves, and not really going anywhere and consolidating sort of up near the highs, that could be suggesting that we're due for a little bit of correction. I think that would be healthy for the cattle complex, both live and feeder cattle. But I don't think we've seen a big shift in fundamentals. I'm not bearish the cattle complex. I think if we had a correction, that's it. It's a correction. I still think there's a good reason to be up at these prices and possibly higher prices down the road.
Yeah, definitely. But we have gotten premium with the futures to the cash. Could the market just be kind of waiting for that cash to catch up a little?
Yeah, right. And part of that waiting and part of correcting a market or correcting the overbought condition of the market, all those things would make a correction a healthy thing for the market. Now, here's the thing, and I'll say this about corn and soybeans too. Corrections don't always come when you expect them to or want them to, Michelle. So it doesn't necessarily mean we have to. But I think this would be a good place to see that happen from. And with that cash being lower, that's kind of giving us sort of the sense of gravity in the cattle complex that we could actually come down to get closer to cash. And then maybe that triggers cash to move higher if that were to happen, because that could help the packers' margins based on hedges.
Yeah. Hogs went the opposite direction. We've had a pretty good run there, especially getting the summer months over $100. So has the cash and cutouts just kind of stalled out enough that we have to correct here now?
Yeah, it's got this kind of wedge formation happening. Go back to the gloom and doom we had at the end of last year into the first trading day of this year, based on the new California legislation. We've had a really nice bounce since then. We've really come back, because the world hasn't ended, Michelle, and that's good news. The pork world hasn't ended, and that's really good news, right? So we have corrected that. We've come back, and again, there too, I think we're at a much more value level nowadays. But we have had that nice bounce. We could be due for correction, and this sort of flagging situation that you've got going on a chart suggests that we're going to have a bigger move one way or the other. I think I lean towards down in the near term because, like you said, we've kind of extended, just like cattle, we've sort of run away from cash and cutouts to some extent. So I wouldn't mind seeing a little bit of a move down in the hogs, but overall, again, I don't think we need to go back to those lows that we had at the very beginning of the calendar year. I think there's good reason to be well off those lows and to be trading in the areas that we are now.
Yeah. And it felt a little risk off here today in the outside markets. Are we seeing a little stall out or anything in either crude oil? The stock market was down pretty hard today.
Yeah, stocks were down pretty good today. Crude oil down, 70 to a buck. It's not too bad. I don't think we've seen a massive risk off day happening in commodities, but if the stock market continues to be under pressure, that could spill over into the later part of the week.
All right. Thanks for joining us. That's Ted Seifried with Zaner Ag Hedge.